जमाने के नए है रास्ते, लाए हैं कुछ हम सबके वास्ते। सुनेंगे सबके दिल की बात, रहेंगे साथ दिन हो या रात। हम सबके साथ हैं, हम हैं हम सबके साथ हैं। व्यापार हो आगे बढ़ाना, जब सबके का हर पल है साथ, तो साथ ही भला क्यों घबराना। लिया हमने अब दिल में ठान, सबके अरमान, नई जिंदगी की है आस, आसमां भी तो है अपने पास। बनाएंगे अब सबको सबल, सुनहरा होगा सबका कल, बुलंद सबके जज्बात है। साथ हैं, हम हैं सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं। जमाने के नए है रास्ते, लाए हैं कुछ हम सबके वास्ते। सुनेंगे सबके दिल की बात, रहेंगे साथ दिन हो या रात। हम सबके साथ हैं, हम हैं हम सबके साथ हैं। व्यापार हो आगे बढ़ाना, जब सबके का हर पल है साथ, तो साथ ही भला क्यों घबराना। लिया हमने अब दिल में ठान, सबके अरमान, नई जिंदगी की है आस, आसमां भी तो है अपने पास। बनाएंगे अब सबको सबल, सुनहरा होगा सबका कल, बुलंद सबके जज्बात है। साथ हैं, हम हैं सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं। जमाने के नए है रास्ते, लाए हैं कुछ हम सबके वास्ते सुनेंगे सबके दिल की बात, रहेंगे साथ दिन हो या रात। हम हैं सबके साथ हैं, हम हैं हम सबके साथ हैं। किसी भी दिन की हो जरूरत या व्यापार हो आगे बढ़ाना, जब सबके का हर पल है साथ, तो साथ ही भला क्यों घबराना। लिया हमने अब दिल में ठान, करेंगे पूरे सबके अरमान। नई जिंदगी की है आस, आसमां भी तो है अब।
India is a land of diverse cultures, timeless traditions, and rich heritage. Banking and financial inclusion of every individual plays a crucial role in the economic development of the country. However, the sheer, diverse, and expansive landscape poses a challenge for setting up of brick-and-mortar banks and financial institutions in every nook and corner of the country. There was a need to bridge the gap between a potential customer and the bank. Sabke in Hindi means for everyone, and in English it means below 1,000. The name symbolizes its vision of universal financial inclusion by creating technology-enabled touchpoints within 1,000 meters of every household.
What we do, we essentially link banks to last mile customers, the unbanked customers, in the regions where banks don't necessarily reach them in a brick and mortar fashion. So they tie up with us and we kind of find the right customer base, acquire those customers, do all the paperwork that's required so that the bank then onboards this customer and provides the services, whether it is savings service, whether it is loans or any other payment services. We enable those things by acting as a bridge between the borrower and the lender or saver and the bank.
మేము వ్యవసాయదారుని నేను ఇక్కడ డబ్బులు వేసుకోవాలన్నా తీసుకోవాలన్నా అనుకూలంగా ఉంది ఆ బ్యాంకులో వేసి సమయం వృధా చేసుకోకుండా ఇక్కడనే అనుకూలంగా తీసుకొని మా పనులు మేము సాగించుకుంటున్నాం.
The way the model works is that we deploy a fleet of agents on the ground with typically local retailers who run their own regular shops. We try and convert them to act as or double up as a banker. Effectively, they become human ATMs. We hand out this low-end technology equipment, which is a mobile phone and a small printer, and they sort of then use their own cash, which is generated in their regular business, to be able to provide services to the communities around them. Over a period of time, we also added many products on this platform. We now give out loans in groups of women. We give loans to individual entrepreneurs. We collect savings. We do money transfers. We allow people to withdraw their account balances. So that's kind of how we have built the whole model, which is in a way a model that enables any financial institution.
Sabke's feet on the street and technology platform which it developed really helped the bank to go out and expand their operations in these areas. So over the last 5 years, we have grown 100 times. We are well recognized in the banking world. We have a good support from our investor team. We see that confidence keeps on growing. We have recently concluded 2 rounds of investment and investor confidence is really high on us. All this has happened in a very short while. There is no looking back from here. That's what I feel. We are growing and we are growing very strong.
Sabke has developed software applications that are integrated with core banking systems and work on mobile phones, allowing the users to perform financial transactions in a safe environment, eliminating the need for a traditional brick-and-mortar bank. The future of banking is digital, and Sabke is doing its bit in moving India towards a safer, more accessible digital space. With Sabke expanding its reach and its ever-growing customer and agent base, we are positive that the company's mission to connect every individual and household to mainstream financial system, thus promoting an inclusive and prosperous economy, standing true to its motto, Sabke liye samriddhi laye.
While India's GDP continues to grow at a frenetic pace, ranking India among the top 5 countries in the world, the need to bring down disparity among the 1.3 billion population has never been such an exigency. iFinance provides loans to micro-enterprises, which are at the bottom of the pyramid, and by doing so creates a positive social impact which is transformative. There are almost 60 million enterprises which are at the tiny scale in India, and they contribute 90% of the employment in the industrial sector. And yet, banks have not been able to fund them because they do not possess the right business documents, nor do they have a prior credit history. iFinance has solved for this.
Around 2 ਸਾਲ ਪਹਿਲਾਂ ਜੀ ਕਾਫੀ ਲੋਸ ਹੋਇਆ ਸੀ ਜੀ, ਕਾਫੀ ਗਾਵਾਂ ਮਰ ਗਈਆਂ ਸੀ ਤੇ ਉਸ ਤੋਂ ਬਾਅਦ ਜੀ ਸਾਨੂੰ ਪਤਾ ਲੱਗਾ ਕਿ ਕਾਫੀ ਸਾਡਾ ਬਿਜ਼ਨਸ ਡਾਊਨ ਚਲਾ ਗਿਆ ਸੀ। ਸੋ ਉਸ ਤੋਂ ਬਾਅਦ ਪਤਾ ਲੱਗਾ ਕਿ iFinance ਬਾਰੇ, ਸੋ ਅਸੀਂ ਉਹਨਾਂ ਨਾਲ ਜੁੜੇ ਤੇ ਹੋਰ ਉਹਨਾਂ ਤੋਂ ਅਸੀਂ ਲੋਨ ਲਿਆ। ਲੋਨ ਲੈਣ ਤੋਂ ਬਾਅਦ ਅਸੀਂ ਜੀ ਆਪਣੇ ਫਿਰ 5-7 ਗਾਵਾਂ ਲਈਆਂ। ਉਸ ਤੋਂ ਬਾਅਦ ਫਿਰ ਆਪਣਾ ਸਾਡਾ ਜਿਹੜਾ ਬਿਜ਼ਨਸ ਆ ਉਹ ਪ੍ਰੋਫਿਟ 'ਚ ਚਲਾ ਗਿਆ। ਸੋ iFinance ਨੇ ਸਾਨੂੰ ਬਹੁਤ ਮਦਦ ਕੀਤੀ ਹੈ ਜੀ ਇਸ ਕੰਮ ਕਰਨ 'ਚ। iFinance ਹਮੇਸ਼ਾ ਨਾਲ ਹੈ ਜੀ। ਸੋ ਅਸੀਂ ਸੋਚ ਰਹੇ ਹਾਂ ਕਿ ਹੁਣ ਹੋਰ ਲੋਨ ਲੈ ਕੇ ਤੇ ਆਪਣਾ ਬਿਜ਼ਨਸ ਹੋਰ ਐਕਸਪੈਂਡ ਕਰਾਂਗੇ।
Our teams have innovated on a variety of data methods, be it the use of cluster-based patterns that you see in data, or use of scorecards like the psychometric and the behavioral scorecards that we use, or the method by which we glean data from scattered information that micro enterprises provide. I's vision to be an admired leader in lending to micro enterprises is taking shape rapidly. It is catalyzed by an engaged team and supported by machine learning and data science. We are now a profit-generating company that is creating a transformative impact on micro enterprises through our funding and beyond funding initiatives which help mentor them and build success for them.
A very good evening and a warm welcome to all our viewers on Zoom and Facebook Live. We welcome you to our webinar series, Basic Sabke Samvad, in which we facilitate conversations with social sectors innovators, influencers, and integrators. This series is our tribute to late Mr. V. Nagarajan and late Mr. Amit Mehta, founding members of the Basics Social Enterprise Group and stellar personalities who have left behind a legacy and an imprint on the social sector. We thank all of you for taking out time and joining us for what is surely going to be a stimulating and engaging session. Sabke Impact Solutions Limited is a corporate banking correspondent and digital finance intermediary with high tech and touch capabilities, which offers affordable, accessible, and scalable financial solutions to underserved communities. Today's session will be a freewheeling chat about disrupting MSME finance with Mr. Sanjay Sharma, Managing Director and CEO of iFinance Private Limited. We will be hosting a Q&A session in the last 10 to 15 minutes of this session and would request our viewers to post their questions in the chat box on Zoom and in the comment section on Facebook. Now, without further ado, I would like to call upon Mr. Sasidhar Thumuluri, CEO and MD of Sabke Impact Solutions, to take the session forward. Over to you, sir.
Thank you, Kiran. And good evening, good afternoon, and good morning to everyone, depending on where you are signing in from. Thank you very much for making it, despite being a weekend, and adding value to this humble knowledge sharing endeavor that we do in memory of our founding members, Mr. V. Nagarajan and Amit Mehta. And I must thank our guest. It's really an honor and a pleasure to introduce Sanjay Sharma, an inspirational and dynamic entrepreneur, innovator, and well-respected business leader, who I also see look up to as an inspiration. An alumnus of IIT Bombay and IIM Bangalore. Sanjay is a co-founder and managing director of iFinance, a leading NBFC that provides working capital loans to micro enterprises that are new to credit. An industry veteran, Sanjay, during his illustrious 25 years banking career, he has helped pioneer several initiatives at HDFC Bank, ICICI Bank, StanChart, that have defined the evolution of consumer lending in India. With 60 million micro-scale businesses in India that are considered unlendable by banks and finance companies due to underwriting and servicing challenges, Sanjay has taken it upon himself as a vision to include these entrepreneurs or enterprises into the financial system and founded iFinance. And iFinance is an innovative alternate lending platform that uses various alternate methods for underwriting based on industry cluster insights, data science, and digitized workflows to fill this huge gap in lending. We will learn more about this in our freewheeling discussion with Sanjay. Just to add a bit, I has offered loans to about 300,000 micro enterprises and by lending about 3,800 crores since inception. Founded in 2004, I has been recognized as a leader in this space, which is backed by many marquee investors in its mission to create a digital India and an inclusive India. Capital G, Elevation Capital, Falcon Edge Capital, LGT Capital Partners, A91 Partner, Marge Invest. we will know more about it in a few minutes. But thank you, Sanjay, for really accepting our invitation and sharing and willing to share your views on this platform. Welcome.
Thank you, Shashi. It's an honor to be here on this platform, and thank you for a beautiful introduction. I think I'm looking forward to the discussion that we're going to have.
Very much, very well indeed, Sanjay. So let's jump into this, and just I'm curious myself, and I think many of our audience as well, that you've been a career banker who I would say know exactly why you should not be lending to micro businesses for various constraints that bankers face. But you exactly do that today in your new avatar in iFinance. So why iFinance? What led you here? Could you please give us a bit of insight into your own story?
Sure. See, I think the working at iFinance and working in the impact space is certainly a matter of the heart. And I remember that while I had a very good career in banking, but after working there for 30 years, I had always thought that by the time I turned 50, I should get back into and contribute to some social purpose and give back to the society, which everyone should. And I think most of us do think of that. We've been very fortunate to come from very good backgrounds in terms of education. I've got the best opportunities in the country. And I think it's not a surprise that is that. And what I did was that I was working in a bank overseas, and I returned back and decided that I wanted to explore. And one of the things that I did was to work in a micro finance institution for almost a year. And that was the year 2010 when all hell had broken loose. The Maligram committee had come in and formulated new rules because there was this problem that had been created in some states. And it was a difficult time for the microfinance industry, but I was very happy that I was there to help a microfinance institution go through that difficult time and bring stability to the business. And once I worked there for a year, I wanted to get back to my home base, which is Delhi. And when I came back, I looked around and decided that it's the micro enterprise borrowers that needed a look into, and that's one area where not much has been done. And that's one lever that can really move a lot of things up in terms of social upliftment, etc. And when I started that, exactly to your point, when I spoke to some of my banker friends, and some of them highly experienced people, everyone said that please don't do this because this is one sure business which is not going to work. And I think I persisted, but just to be sure, we did a survey of 350 micro enterprise owners in 5 different towns and gained a lot of information to say that can this really work and how at all it will work, how will we underwrite. And I think now, this is our 6th year, almost the 7th year starting now. And we started in 2014. So I think it's been a good journey. I'm so happy that I did take that step, despite everyone warning that this is not a great opportunity.
Yeah, I do remember. I don't know whether you recall, but you and Vikram came into IFC in I think. Early 2014, I believe, to brainstorm on this idea and try to see whether IFC has an interest looking
yes, Shashi, in fact, if you remember that it was a very tentative sort of, because everyone was telling us, don't, this is not such a great thing. In fact, IFC was one of the entities that encouraged and said that, go ahead and come back with a business plan. So, yeah, thanks.
Yeah, I do remember those conversations. Yeah, so glad to see how that idea that you were talking that day has evolved into such a massive program today. Sanjay, coming to a little bit more about what you offer. I mean, the video throws a little bit light on your products, but just to get a sense, are you just looking at working capital requirements or of a specific kind of MSMEs? How do you do that? What are the products that you actually offer?
Shashi, while we do not limit ourselves to the working capital need, we can give something for capital deployment itself. But I would say that more than 90% of our lending is for working capital, and it's for micro scale businesses, and I would call them tiny scale because these are typical businesses that have a turnover of below 1 crore. Most of them are in the 50-60 lakh range or lower. So 50 lakhs is a very good good benchmark to use when we look at our customer base, which means that they have a 2 lakh to 3 lakh turnover or 4 lakh turnover in a month, and they need 1 lakh, 1 lakh typically as a business loan for working capital. So our average ticket also tends to be in the range of 1.5 lakhs.
So that's very much micro. I mean, it's very difficult to distinguish between a standard microfinance customer and perhaps the segment that you are serving. This is more maybe a bit more growth stage compared to a typical MFI borrower, but I think it's good next phase. And that is a space which I think a lot of MFIs tried but not scale, and you know, redefining that whole idea, I think I'm meant to see. So can you throw a little bit more on this segment? So is it all that small, really micro scale, or you have a much wider range that you serve?
No, I think we stay very focused around that. So you won't find many loans which are 10 lakh and above. Most of the loans will be below 10 lakhs. And yes, you're right that it is almost at the borderline of what MFIs provide. So we have similar business owners like you'll have dairy, for example. You'll also have some shoe making businesses. You have toy making businesses, etc. And the only thing is that that segment is we define it as someone who is running a business and probably employs some 5 to 10 people. So we would not, we don't look at people who are employed. It is all businesses. I think that's primarily the differentiator, I think.
That's truly, I think, inclusive. Is it all unsecured, or do you also do secured lending?
We, for this segment, as for MFI segment, the need is for unsecured. So almost 85% of our lending is unsecured. And only 15% of the lending where people want to use capital for longer term use, which is what I was saying that we do provide for capital growth. Those are often with some collateral, and that collateral often also is not the best of collaterals in terms of what can be mortgaged. Often it is a quasi-mortgage sort of arrangement, but it brings in some moral suasion into play and put some skin into the game from the customer side.
Well, so in the industry that I come from, microfinance broadly, and now trying to do some things beyond that. But the biggest way that we manage our risk is to transfer it to the community, right? In microfinance business, and that has helped scale not only from security risk management point of view, but also from cost management point of view. So I don't believe you follow that model. Could you throw a little bit more? How do you manage the risk? How do you actually? What is your business model? How does it work?
Yeah, I think the difference is that we don't believe we don't want the customer to first go through the group guarantee model. We straight away pick customers who are, in our view, good underwriting risk, and without needing interplay of 6 months or a year to be in the group model. That's one learning from the MFI industry itself, that as customers become better and better and they go to the second and third cycle, they want to be individuals and to be lent to as individuals, and larger amounts have to be lent. So one way is, and I think it's a very good way of saying that, let's see the customer's track record for a couple of cycles, and then among them choose the customers who we believe are good creditors. In our case, we have followed a method of underwriting which is cluster-based. And I'll give you a very simple English example. If you went to, let's say, a toy maker in Chennapatna. Now, and incidentally, that's a highly stressed sector today, but you will find that the productivity numbers, the total cash flow numbers are very similar from one unit to the other. So if someone has 5 people working there and someone has 8 people working there, you'll find that the sales is typically in the same proportion. Or if you went and said that how much raw material do you buy in a month, and you looked at that, you can actually estimate what the overall sales is, because the product pricing is very, very similar. So you won't find that one product, one toy maker is selling something at 500 and the other is selling it at 200. They're all in a very narrow range. And that's why it's easy to pick those markers if you understand the industry, to say that what is the sales of the customer. And I think many of the supply chain people in an industry can, by looking just at the setup, can tell you that what the volume of production is. So it's using that, but we have made it into a system so that it is all held in as data in our system, and it tells us. So if you told me that we're looking at a loan for a toy maker, it would use those parameters to tell me what the income should be. If it was a shoemaker, some other parameters might be important. And that complexity has been automated and made into a helpful underwriting tool.
So how would these customers come to know of your company and your services? How would they apply? Is there a platform? Is it?
Shaji, we still have to be in branches. We have 234 branches now, and they're spread across 18 states. Now, we've tried various things. We tried using some platforms. We tried using brochures, etc. But the customers they do not take to that process easily. So a door-to-door or a face-to-face approach is what has always been very effective. And I think saying that, oh, we cannot lower our cost because we don't have a digital access, etc., we have used that as a challenge and said that how can we improve the productivity of the loan officer? And by increasing the productivity of the loan officer, our cost of origination of a customer is actually better than many of the digital fintech companies. So I think I'm sure that Sabke will relate to that, because that's the model that you also use, and it can be made very, very economical.
Yeah, I agree. I think it's a productivity formula that we have to work out. Tell me about collections then. Most of the lenders say that the art of lending is in collections. I believe art of lending is in underwriting, not necessarily collections, because you need to identify the right customer the right way. But I don't know, what is your model? How do you collect, and what if delinquency happens?
I think on collection, we like to automate it as much as possible. And right from the beginning, we told our customers that we are not going to come and collect cash from you. You will have to deposit into your bank account. So our disbursement goes into the bank account first of all, and 95% of our customers have ACH arrangements with us. When we started, when I spoke to some of the industry pundits on that, many people said that this segment is not going to look at ACH as a way of payment. But we persisted, and initially we had 70-75%. It has now grown gradually, and now it is at between 90-95%. So a lot of customers are educated into saying that please put money into your bank account, and we have an installment coming on a particular day, so money handled. Whatever is not collected, there are certainly customers who bounce. So those customers and the remaining 5% who are in process of getting their ACH deployed, there we do go and collect. Now, collection, we have, first of all, our distribution team, the loan officers themselves collect the earlier buckets. And then we have a hard collection team which picks up cases after 30 days are passed. The collection, we use again a lot of automation in the collection team. We have like a CRM, a collection management system, which keeps track of where's the person going. It takes care of the GPS coordinates that our people have visited, keeps track of the history, etc. And there, it's very important to keep track of these things. And there's no rocket science. It's the basic thing of saying that you have to keep track of what the promises are, whether the promises are being kept. If they are not being kept, what are the reasons that promises are broken, and try to improve. So I think we've essentially deployed good processes and good techniques. There's only one more thing that I may add, that we also use data science to work in our case, and I think it's been very effective. And anecdotally, I can share one example. We have a machine learning model that tells us that which customers are likely to bounce. So if I have 160,000 customers, I can divide them into 10 categories, and each category I can tell you that this category has such and such percentage of bounce, possibility of bounce. It has been a very stable machine learning model that even during the COVID times worked very well. And that helped us because the best customer, the guy who's right at the top, he has a 98% chance that he will not bounce. So in those cases, we don't have to call the customer at all. We can send him an SMS and that's it. And we send an SMS and that 98 becomes 97 or so, but people do pay. And this helps in focusing the collection effort on the ones that really do need that visit to their household. So we've used that also to work well for us on the field.
That's incredible. So before coming to the COVID, I think it's a unique situation all of us are in. But why do you think there is not much of a rush in this space? I mean, we see a lot of competition down in microfinance space because of the standardization is very, very high there compared to what you are creating the standardization for probably others to come in. But why do you think others are not able to figure this out? And many of them are not able to figure it out. What is unique about iFinance?
See, I think it is a difficult space to operate in. And let me tell you, so is MFI space. But MFI space over years, I think it's been there for almost 15 odd years, has set up a process. And I think there it is intuitive that having a group guarantee helps. When you remove the group guarantee, even the MFIs have faced problems in easily adapting this model. And I think this is where the challenge is, that it's not easy. It needs a lot of faith in the fact that the process will work. And once you are large enough, you can have those wonderful machine learning models and this model and that model. But till you have 100,000 customers, it's very difficult to have any sort of real model. So slightly a bit of a chicken and egg that, how do you get to 100,000? So I think we have been fortunate that our underwriting engine has worked well and we have not had major problems. Although we have seen demonetization, we have seen GST implementation, now we have seen COVID. But I think once you are over that 100,000 mark, it gives you a lot of comfort that yes, this business can sustain and will sustain. I think that is probably the only, that is the fear that I think is holding back a lot of people. But because otherwise India is filled with people who are very entrepreneurial, are very smart people in finance. And I'm sure that they can crack this problem without any doubts.
Yeah, so, but today you may say 100,000 as a number, but I'm sure reaching there would have been quite a journey, right? And in that process, you had to go through Demon and GST and all that. So talk to us about how do you deploy technology? What are the levers, right? How did you scale to that size in such a short time? And now you of course can use a lot of data models. Talk to us about technology utilization.
The fact that we use a cluster-based underwriting itself is a very good model for picking up data, because I can segment my data into clusters. So it's not that I have one common database for everyone, whether the guy is in dairy or whether the person is in a restaurant business. So structuring it by cluster helps. And I think that is something that was thought through right from the first year itself when we started. So I think that is the piece that helped us underwrite as well as helped us build the data structure. So that's one very large, very big thing that has gone in our favor. The second is that we've always been a very number-driven organization. Everything is metrics, everything is measured. I'm a very firm believer that anything that gets measured can be achieved or will get done. So there is we invested into a data warehouse platform which can visualize the data and tell us, that what's happening, whether it is the net flow rates or the static pool data or branch by branch data. And that helps because not everyone can really relate to tabular numbers, and figure out, what's happening. So when you see a graph or when you visualize, it helps. So we've used a lot of techniques to visualize the data and make it easy for everyone to understand. That's the second big piece that has helped us. And I think up to 100,000, yes. So somewhere you got to have faith that you have good process on the field, for which you need to have the vigilance teams, etc. Because things can go wrong on the field. And I've often heard, and this is something that I've learned from the MFI experience, that it is not the credit risk, it's the operating risk, which is the risk on the field that really kills you. So we made sure that we did not see any operating issue, no frauds, no challenges of cash being stolen, etc. And we stayed away from cash, as I told you. So that's the third big piece that has helped us. I would rate these three at the top.
Fair enough. And so that I think probably thought through kind of a process you started putting it in the beginning. But tell me, how did the environment, like say the whole digital rails that have been also laid right in India stacks of the world, and on today we are talking about account aggregators, Oken, Threads. Are you in that like able to take advantage of these digital infrastructure? What do you see going forward on that front?
Suji, I would have really loved to see a lot of our customers use that or benefit from the digital space. But the hard fact is that the adoption of digital is still quite limited. And while we have moved people into the ACH-based payments, etc., but getting them to actually transact their business on digital has always been a challenge. Things have changed a little bit during the COVID times, but I would be wrong if I said that now people are very, very comfortable with it. People want to move, but they need to be shown how to do it, and only then will they get comfortable. So we have seen, yes, if you say that earlier, how many UPI transactions were you doing and how many digital wallet transactions were you doing, compared to earlier, we might be 3 times or 4 times that many. But the number is still small. It might be just 1%, might be 3% or 4% of my transaction base. So there's still a long journey to go. It, in a way, reminds me of my times with credit card business. And everyone used to say that, that credit card, we are not competing against each other, we are competing against cash. And this we used to say about 30 years back. I think even today we are saying the same thing after 30 years. So things have changed. The number of transactions have become more credit card based, but cash is still remaining high. I think there's a similar story with digital. And I think it will only gradually change. And the interesting thing is that with the COVID coming in, one of the things that used to work extremely well with micro enterprise businesses was that they had small turnovers. They could go into the open market and sell. So they didn't have this worry that you asked a guy who was making shoes that if your volume became 30% more, would you be able to sell? You would say, yes, sir. You'll definitely sell. Why? Because you go to the open market, and where millions of shoes are being sold, another 30, 40, 50 shoes will not make any difference. But the same thing has worked against them during COVID, because if you don't have tight linkages with your buyer, if it's an open market buyer, when the open market shuts down, and which happened in the clamp down, they were left with no option. How do they sell? So what was a convenient thing for them actually has been the biggest challenge for them in the times of COVID. And this can be worked. One can find a solution to this if you move digital to digital. If they move to digital, they will have easier supply chains, better supply chains, better market access. So digital is the need, but how many of these customers can handle it and do it comfortably? So it's a question of they want to do it, but the ability to do it is very limited.
Yeah, I think it's a journey, and we may have to play our part in helping them go through that. But I think the very fact that you are digitalizing the workflows and putting them to a digital sort of world itself, right? Getting them onto credit bureaus, and I think that itself is a good start, and then they'll pick it up from there. Tell us more about COVID. So, how did COVID impact, and how did you manage? Is there a pivot? Is there a change in the way you did business, manage your risk? More on that.
Yeah. I think on COVID, the first phase, we did many things. A lot of them on the business side, which was that we moved our distribution team to fully get into collection, which I think many people did. We did that, no difference. We also use the data science model that I talked about. And we have a model not only for who will bound, but we also have a model which says that once you bound, that how likely are you to pay early or pay late. So will you pay up in three days, 4 days time, or will you take us till the end of the month to pay or not pay at all? So these models have been deployed, and I can tell you that those models were worth their weight in gold during the COVID time, because otherwise there's no way. When you have a volume that is 4 times the normal volume, no human effort can overcome that. So I think we were fortunate that those models helped us tell which customers to really go after and which ones would pay on their own. We always encourage our customers to keep paying their installment even during the demonetization time. We encourage people to pay because I think it brings in that discipline. Also, we told them that if you don't pay now, it will ultimately lead to interest, which is only fair that that we lend you money. So we continue to see almost 40 to 50% people pay right through the moratorium. In fact, when we ended the moratorium, there were hardly 20% people who had not paid many of the installments. And thanks to that, the moment the moratorium lifted, and that was the first month, I remember October or so, then we tested how good our customers were, and we were happy that we started seeing more than 85% collection, and in the next 2 months it went up to into mid-90s. Now, I'm telling you that it's a extremely surprising development, because I would have thought that with the customers so badly affected, every credit specialist, whether credit bureaus or consultants, everyone said that the worst impacted are the micro enterprises, especially in the business segment. And our customers continue to pay. That was the first phase of COVID. The second is now where it's almost like that once you emerge from underwater and you gasp for breath, and if someone then puts you back in underwater, then it can lead to a serious outcome. And I think that is how I see the second wave, that it is short, but the numbers have dropped dramatically. We are still in the 80s roughly in terms of collection, but for us, even 80s is quite a shock for us as an organization. So I think I believe that it will take us time to heal that problem with our portfolio. Our customers also need time to heal their business. So I think one wonderful thing is that credit guarantee allows 20% to be given to these customers, and that helps because these customers do need a little bit of money to restart their business. They kept track of customers who have either absconded, completely closed their business, etc. And we are happy that that number is very, very small today. Even today, that number has not become very large. So we believe, and this is again some learning from the MFI world, that whenever MFIs find that their customers are in a big trouble in a particular pocket, they have always said that let's help these customers and things will be fine. Now, this is not the way a banker thinks. Bankers' thought is that, oh, he's in trouble, let me pull back my money. So I think we also are trying to work like MFIs do, and say that we do believe in these customers. They have paid us regularly. Our models show that these are good customers. So let's give them a little bit of money and let them prime into business. So the answer to the COVID second phase is that yes, that impact is going to be deeper. The NPAs that we were so proud of saying that, despite COVID-1, we have got such good numbers for the NPA. That number will certainly double for many of the players, including us. I think it will be almost close to double that number, but it will be short in nature. And we have a whole financial year to correct for that. So my sense is that by the first quarter, most of the peak of the NPAs will be behind us. And then in the next 3 quarters, business will settle down and things will be fine. And I'm saying that, Shishi, because there's a lot of negativity in the market. Everyone says that, how these businesses are being impacted, and they are. But they're also very resilient. And the fact that in the first phase, they have continued to make things work is a good sign. Also, these people don't have too much to fall back on. What do they do if they don't manufacture shoes? Then what does that person do? So they have to come back, and we have to support them, and the government has to support them to get back on their feet.
No, I think rightly said. Resilience is probably their day-to-day quality because crisis is not new for them. It is new for us in that sense. But tell me, see, there are entrepreneurs who are enterprises that were shut down also, right? Because especially the urban-centric, where high containment zones, where prolonged lockdowns and things like that. We have in our own database, we notice people either shifting their businesses, scaling down, or closing and going out and working as a laborers or employees. I think those things must have happened in your portfolio also. So how are you dealing with those? I mean, those must be significant numbers.
Yeah, see, people who have closed down their business permanently, see, there are people who have closed their shutters and they say that yes, we will start. And they're still at their residence. There are some who have closed down their business for sure and will not open the business because they don't have the money to start the business. And then there are third who have absconded, who have just closed their shop, and you have to trace them where they are. They've probably gone to their village or now. I'll tell you how things are likely to pan out. During demonetization, we had the same problem, and there were customers who actually closed down their business because they said we won't be able to survive. And many of them, in fact, majority of them went and took up a job. So I've seen shoemakers who have gone and taken up a job. I've seen sport good makers who took jobs in large factories and started earning and then started repaying our loans. And they continue to repay our loans because they believe that after a few years, they will set up their own shop again. So the good part is that the willingness to pay so high in the Indian psyche, especially in that segment, that if it's not working out, they will pick up a job. But they will honor the fact that there is a loan and it has to be paid. Now, one has to therefore allow them a little more time, to give them a little prolonged time. During COVID, during demonetization, we had told them just pay 1/3 of your installment. For 3 months, they paid only 1/3 of the installment, and we said that the rest of the installment we'll take later. And we didn't even charge interest on that, in fact. We said that we'll absorb. So these sort of things can help. And I think this time the government has actually realized it. So the moratorium is exactly that process, or giving them extra funds through ECLGS is another piece. So there are tools that have been used. Can I say that these are, do you solve the problem? Honestly, I don't think that will solve the complete problem. I would have liked also, as many economists have said, that why not have a direct fund transfer to these micro businesses? And I believe that that is a need. But at least we have something whereby the finance companies can help in finding a solution for these businesses. So the answer is that some who have responded, some of that we'll have to write off. But some will come back if you give them time. And some will open up businesses and they will be fine maybe after 6 months.
Yeah, I think that working with the customers and helping them, I think, manage the situation will come back to us in a big way, I'm sure. That's good that you are actually not behaving like a typical banker, but more as a micro banker, I would say. So before I open it up to audience questions, what do you foresee? You're creating some interesting models, I would say very unique in your own way. How do you see the next wave of MSME lending happening in India, and what do you think you will, as iFinance, aspire for?
Shashi, without doubts, the movement will be towards digital because it is a far more cost-effective channel, especially in servicing customers, and also because there is a lot more transparency in that process. You can see how the things are progressing. So I think that's the direction we will take. India is not afraid of technology. I have seen that in the mobile phones. We were one of the first countries to have mobile phones. Even the Panwala had a mobile phone, I think, before anywhere else in the world. So I think people will adapt to technology. We are not the sort that we get completely put off by technology. So it will come. Today, a lot of our customers are using WhatsApp. We need to get them to start using UPI and wallet. They have seen that during digitization, many of the people who never used that are willing to accept. Now today, the good thing is that you ask anyone that, can I pay by Paytm, will gladly say yes. So things are moving, and I think that is the direction that things will take. But servicing the customer, understanding him, and standing by the customer in times of difficulty will need to be factored in. You can't treat these customers as a payday sort of customer that, if you don't pay, then we initiate legal actions. It has to be, we got to look at, what has happened on the MFI space and learn from it. So I think digital is the clear direction without any doubt.
Fair enough. Let me also let our audience pose a question. So I'll unmute Swati Desai, who's a veteran banker and is also a board member of Sabke and other basics companies. So Swati, you may unmute yourself and could ask the question if you can unmute yourself. Yeah.
Right. Thank you, Sanjay, for very useful insights. It was nice getting your inputs. What I was wondering is that now there are so many players in this area. Some are crass commercial, some are more socially oriented. Do you see any areas of synergy where, we can share maybe information or data, because much of the lending will be data driven now. And, we would have some healthy competition, but do you see any areas where organizations like yours, say, for example, yours and ours, can work together, say, in the areas of advocacy or in the area of data sharing for, say, credit risk management? What are your views on?
Swati, I would be very happy that if there could be some arrangement, and we're quite open in terms of sharing, what do we do, how do we do it, etc. Because I believe that we have touched or we have scratched only the surface of this problem. There are 60 million, 6 crore enterprises. I have 150,000, 160,000 customers. I've given loans to 300,000 years, but what is 300,000 when you look at 6 crores, etc. So it is not about competing, but it is about deepening that arrangement. And therefore, we're quite fine with looking at how to work together. I believe that you have a wonderful machinery on the field that there's so many products, and if they can help us also cross-sell our product, that would be wonderful. And I think there can be areas, even in collection, for example, how to collect. We can provide some support, the technology that we use, how we look at data, etc. I'm quite happy to share to a reasonable extent about how we work, because I believe that it's even in the market we don't come across as competing. If someone told me that, do you find the typical, that do you find a 5-star, do you find a 1-star, do you find a Sabke competing? And my answer is no. I don't normally. It's never that that I had a customer who Veritas took that customer away, or Sabke took the customer away, or RBL took the customer away. It doesn't happen that way. That intersection is hardly there. So the answer is yes. We would be happy, and Shashi can reach out to me. We will be happy to set up a meeting and see what can be done.
It makes sense. I think today we have to leverage each other's strengths, and the problem is too big to solve. So appreciate that very much, Sanjay. Let me unmute Satya, who is a veteran MSME lender himself as a part of the basic group. He's a group CEO for us. He has some interesting questions on your lending model. Satya, you want to unmute yourself? Yeah. All right.
Sorry. Hi, Sanjay. Yeah, see, I have two specific questions. One is that do you look at the new enterprises versus just less than a year old in the existence? And second thing is, what is the ratio between the investment involved in the enterprise versus what you lend to them?
We lend to companies that have been in the same business for 3 years. Now, honestly speaking, there's very little data to establish that they have been there for 3 years because there's no income tax return, etc. So I think that to a large extent, going there, asking a few shops nearby that has he been there for 3 years, they someone will say, "Ha, 2 saal, 2.5 saal, 3 saal, whatever." So it's a slightly looser criteria, but we do want him to be there for 3 years. Okay, we believe that if someone has seen 3 winters, he understands the business. Now, it so happens that many of our customers have been there for more than 3 years, plus they have been in the same business as supervisors in some factory for another 5-6 years. Now, I'm not at all fazed by the fact that, then what if someone wants to do new business? I'm there to solve some problems. I can only solve some. I'm not superhuman. I am solving problems for people who are there for 3 years plus and who have never had funding. The funding that they want is typically their turnover is about in the range of 2 to 4 is that typical golden spot. I would say 2 lakhs to 4 lakhs per month turnover. Now, if they are in manufacturing, it would be on the higher side. If they are in the service industry, it would be probably could be even a little low. So it will depend on what they have invested. Will depend on whether they are manufacturing, etc., or service. But typically, their investment often is in the 50,000, 60,000 rupee range up to a lakh, not more than that. So that is the investment they have done. Probably they have gleaned over years of work and then catered that. So that's the corpus that they have.
Thank you. And the other thing is these enterprises with 3 years of experience or existence, do they provide you the tax related things and balance sheets and those things, or
no,
you don't ask for them?
They don't have. Most of them are in the 20-40 lakh range, and anyone who has a turnover of 40 actually thinks he's below 20, so he's below that GST bar also. Now, what we instead use, like I said, is data around how many customers does he have, how much is the electricity that he consumes if it's electricity consuming business. If it's a tailoring business or a dress business, then how many workstations does he have? In dairy, for example, it's a very simple thing that we think that each cow is a workstation. So how many workstations do you have? And we can give you X amount of money. So it is very simple rules, but monitored quite aggressively and corrected quite regularly.
Thank you. I'm done.
Thank you, Sasidhar. Thank you. That's a good operating, challenge that we keep facing. There is Mr. Sunil Hablani has a question on the PSL related. Sunil, you want to unmute? Sushil Hablani.
Yeah. So am I audible?
Yes.
Yeah. It's a very insightful. Thank you for giving me opportunity. So as Sanjay sir, you have mentioned that your average ticket size of loan is 1.5 lakh, and you are offering loans to the MSME micro enterprise loans. So are we classifying these loans under PSL?
Actually, we are not. And part of the reason is that if we source a loan and we give it to a bank, it is not called PSL. If the bank was to source it directly, that would have been a PSL. So just because it touched our hands, it's changed its nature.
Got contaminated.
It got contaminated, yes.
Okay.
So I think that is primarily the regulatory reason. But there's also a reason that, the problem is that I find that in India, we tend to be very socialistic in our thinking. And everyone thinks कि अरे बहुत गरीब आदमी है इसको जो we should give loans at 14%. Now 14% पे I can't even pay for the cost. And that's exactly the reason why forget banks, even the development financial institutions have not been able to get to this segment because 14% mein kahan, you are from the same industry, you understand. So I think we have to say that the primary thing is to give them funds. Because if you don't give them, they'll get funds at 50% and 60% from chit funds. So isn't it better to give them at 24 or 26? And MFIs did exactly that. I know that many MFIs, when they started, they were lending at 30%. Now, does that mean that they were not doing a good job? They were doing a wonderful job, right?
Right. I agree. But so we as a bank found challenge in getting the Udyam Aadhar from same sets of customer right now. So have you find whether these customers, the customers whose turnover is, you can say, less than 50 lakhs, are getting or are applying for Udyam Aadhar?
They're not, and we have not bothered about it because we are not PSL, but it's a good
Right.
question, and we are beginning to ask our customers to apply for Udyam Aadhar because it has become so simple. And more so, it is important because I believe that if government ever agrees to give direct cash transfer to these entities, the bureaucracy will say कि पहले उद्यम आधार दिखाओ. We have told our customers कि better get your उद्यम आधार. You are a business. The intent is clearly there. You are not someone who is just an individual, etc. So why not get a udyam aadhar? So we are trying to help them. It's become quite easy now.
Yeah. Thank you very much. Yeah.
Thank you, Sushil. There are some more questions I will quickly run by in the interest of time. So one is Priyesh is asking, what do you do to achieve that 95% NASH mandate level? Because most of these customers clearly are not very digitally savvy. So,
in short, I often am seen as just asking for a target and not agreeing on all the rationalization. So when we started, we were at 90. I remember, and I told my operations team that you are the ones who speak to the customer regularly. I want 95. They said, but how can we convince customers? Customer will decide what he does. I said, I don't care. Give me 95, and if you guys are smart enough to do that. Now, how did they do it? They spoke to customers. They spoke to the LAs to say that that we want customers. They said that why are we losing these mandates because sometimes signatures don't tally. So digital signing is a possibility. E-mandates are there. So they've done all of that, and I think thanks to that push, it has gone up. So I think for a person who's borrowing, if you tell him that open an account, he will open the account. If you say I want you to open an account only in a particular bank, he might even do that. So he's willing to do many things at that point. And I think getting them to use the ENACH, etc., and to use their bank account is where the challenge is. And I think in the initial days of collection, we ensure that customer puts money into the account. There's some advanced calling that is done to help.
Yeah, fair enough. I think where there is a will, there is a way, right? Yes. You have to make it happen. So last question, there are many more questions, but I think in the interest of time, I'll just touch one question. There's an interesting question about, do you get involved in the non-financial interventions, like forward, backward linkages? Is there any industry connections that you make for these enterprises, or are you just involved in finance and...
that is one area that, in fact, is very close to my heart. And I have been telling people that once someone starts running the main business, I want to focus. So we have set up a not-for-profit company called Foundation for Advancement of Micro Enterprises, and they try to look at how can we help customers better sell, so market linkages, even go to the extent that can we get them onto the e-commerce platform, and some of our customers have been put on Amazon, etc. The second is that, and that's one area that I think is important, is whether we can improve the quality of their product. Because they sell in the open market, there is no incentive to improve the quality. And if we don't improve the quality, we will never be able to compete with the automated world outside.
Makes sense. Let me take one last question. I want to actually close, but there's an interesting question from Shweta from Axion. She asked, do you adjust your underwriting models now that you're getting new experiences during lockdowns and other external factors that are influencing the sector? Are your models getting adjusted with these factors?
The models do get adjusted. And I think, especially during COVID times, we have also added the COVID experience to adjust the models. For example, we found that 28% of our customers are in manufacturing, and higher risk for under COVID. And we changed some of the parameters there. So one is the regular thing of saying that the market is behaving differently, so let's change the parameter. But there's many where we have said that this market is looking good, this sector is looking good, this cluster is looking good, and we can do more. And there are some clusters which have really done well for us. It so happens there is one of those clusters which many people haven't seen as a good cluster to be in. We find dairy doing quite well because we have a model which tries to not overlend to them.
Great. Thank you, Sanjay. I think it's been so, at least for me, a great learning opportunity. And I think everybody enjoyed this story of iFinance. And I'm sure you're going to break more and more milestones and create a lot of history. So thank you very much for coming out and sharing your views with us. And wish you the very best going forward.
Thank you, Shashi, for the good wishes, and all the best to everyone who's on the audience. I think these are difficult times, but I think these will pass. And I think 6 months down the line, we'll probably be looking at this and saying that this is what happened in that 100-year disruption.
Yeah, it'll be a good story to tell for the next generations. Okay, thank you. Over to you, Kiran, to close the session.
Thank you so much, Sanjay sir, Sashi sir, and to all the participants for joining in. We hope that you found this session to be insightful. We will be organizing more such sessions where we talk about everything that falls under the purview of financial inclusion. To stay updated, please follow our social media handles, the links of which are being shared in the chat box right now. Thank you so much for joining again.
Thank you, and everyone, please stay safe and see you soon. Thank you.
नए जमाने के नए हैं रास्ते, लाए हैं कुछ हम सबके वास्ते, सुनेंगे सबके दिल की बात, रहेंगे साथ दिन हो या रात, हम हैं सबके साथ हैं, हम हैं सबके साथ हैं। व्यापार हो आगे बढ़ाना, जब सबके का हर पल है साथ, तो साथ ही भला क्यों घबराना। लिया हमने अब दिल में ठान, करेंगे पूरे सबके अरमान, नई जिंदगी की है आस, आसमां भी तो है अपने पास, बनाएंगे अब सबको सबल, सुनहरा होगा सबका कल, बुलंद सबके जज्बात है, हम सबके साथ हैं, हम हैं हम सबके साथ हैं, हम हैं